Are you trying to qualify for a business loan? Well, today we're going to talk about all the qualifications you need to know to be able to get approved. We're going to actually decode the lender's secret formula of the exact criteria you need to meet to be able to get approved for credit and financing. And we're going to talk about the 3 C's cash acquisition formula that makes it really easy for you to know the exact funding you can get right now. And if you stick around at the end, I'm going to get you access to our special guide on 27 killer ways to be able to get money to fund your business. We got a lot to cover, so let's dive in. So if you're trying to qualify for a business loan, the very first thing you need to know is called fundability. Fundability is like the secret formula that lenders and credit issuers have of the criteria that you must meet to get approved. Now, it's not things you think about like income, credit score. It really has to do with basically how you structure your business. You see, if you structure your business the right way, it looks credible to lenders, and this makes you fundable. As a matter of fact, the vast majority of applications for funding that get denied are not denied because of credit. It's not denied because of things like income. It's denied because you don't meet these basic fundability factors. So you want to get your business set up the right way. You want to make sure that you have an entity set up, preferably a corporation or even set up an LLC. You want to have a separate address for your business. Now you can have a real retail location or you can have a virtual office from places like Regis, DaVinci, or Alliance, but you want to stay away from virtual addresses from places like UPS and iPostal. Now you can also use a home address, but there's some sources that just won't approve you if you do. You want to have a separate business phone number for your business as well. Don't use a mobile phone or a home phone on your application for credit or financing. You want to make sure you have a professional website, have a professional email address that's congruent with the domain of your website. Speaking of congruency, you need to make sure that all of this information is congruent online. Yellow pages, social media listings, your website should all have the exact same information as your application, which should match Secretary of State as well. Look, that's one of the basic checks that lenders and credit issuers do is they actually check your Secretary of State records just to make sure that the information you're putting on the application for financing matches the information that's with the Secretary of State. It's how they fight fraud, by making sure that this information is congruent. So congruency of this information is very, very important. If you can get a business license, get one. And make sure you have a business bank account, because a lot of sources for credit and financing will want you to actually give them a business bank reference. If you've done these things, you've done the basics of business fundability. Now, if you follow me here, then you probably know there's a lot more to it. There's actually 125 fundability factors, but that handful that we just talked about will get you well on your way of qualifying for business loans. Now, let's talk about what kind of loan you can actually get. Well, I simplify this through my 3 C's cash acquisition formula. I stumbled on my own words there. The 3 C's cash acquisition formula is making it simple for you to know exactly the kind of money you can get for your business right now. And here's how it works. There's 3 C's, or 3 main things that lenders look at to give you financing. One is cash flow, the second is credit, the third is collateral. Now, if you're trying to get a complicated loan like an SBA loan, you have to have all 3. You have to have good personal and business credit, you have to have collateral that's equivalent to the amount that you're actually borrowing, and you also have to have cash flow verifiable for years of tax returns. But a lot of lenders, 90% of lending that takes place comes from these alternative fintech lenders that only need one of the 3 C's in order to get you approved. So the question is what's your strength? Do you have some kind of collateral, stocks, bonds, 401ks, inventory, IRAs? These type of things can be served up as collateral. You don't need cash flow. You don't need good credit. You can get funding as a startup using one of those assets to get asset-based lending. Interest rates are typically less than 5%. Qualification to funding usually takes less than 3 weeks. And you're able to get considerable amounts of money equivalent to the kind of asset that you have. Now, maybe you don't have any kind of assets that can serve as collateral. Well, maybe then you have consistent cash flow. If you have 6 months worth of consistent cash flow in your business, that cash flow alone can qualify you for financing. So lenders will look at your bank account statements, your merchant account statements, and lend upwards of 15 to 30% of the amount that you process every single month. And credit doesn't really matter, nor is collateral required. So if all you have in your business is consistent cash flow for 6 months, there's a great chance you can get approved. Maybe you don't. Maybe you're a brand new business. Well, if you're a startup business, you really want to focus on good consumer credit. If you have good consumer credit or a guarantor, a family member, a friend, someone else around you does, then you can use that to qualify for funding as well. There's a great program, for example, called Credit Line Hybrid, where you can use good personal credit to qualify for upwards of $150,000 in credit lines. And get this, you can get approved even as a high-risk industry, even if you're just getting your business off the ground. All you need is good personal credit or a guarantor that has that. Plus, you can get 0% rates for that kind of financing, no doc, and be able to keep the 0% for upwards of 18 months. So great for being able to make all kinds of acquisitions, being able to make moves like increasing marketing ad spend, or even just getting a business off the ground. Or if you have none of the 3 C's, that's when you want to build business credit. Business credit can give you the money you need for your business to fund itself without needing cash flow, without needing credit, and without needing collateral. As a matter of fact, it's the only kind of funding you can really get without cash flow, credit, or collateral. And you can get tons, high limit $10,000, $20,000, $30,000 individual limit credit cards to fund your business without needing the cash flow, credit, or collateral to be able to get approved. So the 3 C's cash acquisition formula is your way of knowing exactly the kind of money you can get. And if you set up your fundability the right way, well, it goes a long way to helping you get approved. So do you want access to funding? Well, then make sure you grab our free guide on 27 killer ways to get money for your business. You can do so at creditsuite.com/27 ways. And if you want to talk more about all the money you can get right now, give us a call. On a free consultation call, we will do a fundability assessment to help you know what's wrong with fundability and what to fix. We'll help you get your business credit reports for free, give you tips and tactics to improve your business credit, and we'll also tell you all the loans and credit lines, the funding you can qualify for right now. You can get that consultation by scheduling online at creditsuite.com/consult or giving us a call at 877-600-2487. Did you get value from this training? Well, make sure you like and subscribe to be able to get more training on cool ways to be able to get the money you need to grow your business.